Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A lighting company and a dating company, of all things, are front and center in this edition of Top Stock Picks. Our strategists are going to give us more details on each. Ben Rains joins me here at the desk, David Boren, out on Skype. Dave, we'll start with you. You've got the lighting company.
Sure, Terry. So today I'm going to talk about Acuity Brands. It's not a household name, but it's another one of these companies where almost everyone probably comes into contact with their products virtually every day. And I love Acuity Brands because they are able to reinvent themselves. They actually started almost 100 years ago as a linen company. They made sheets and towels. And now they are the world's leading producer of not only LED lighting solutions, but whole building solutions for commercial applications that allow companies to very accurately manage their power needs, their lighting needs, emergency and disaster relief kind of programs, and collect a lot of data so that they can save money. So the Acuity Brands products actually save them money when they buy them. Acuity is a voracious acquirer of other companies, right? If there's something that they want and someone else is selling it, they buy that company. And a lot of times companies that have that voracious appetite for acquisition end up really loaded with debt. This is the opposite. Acuity has really excellent financial discipline, and through all the acquisitions they've made, they've got a real powerhouse brand in their industry and a debt-to-equity ratio that's lower than the industry average.
All right. Do you own it? I'll ask you that now.
I do not own it, no.
Okay. So he let the light in on that company. Swiping over to Ben here. You've got a company also that has a lot of brands to its name.
Yes, I'm doing Match Group today. The stock is up 400% in the last 3 years, 58% year to date. It opened up at around $68 per share today. They own a lot of companies, as you said, a lot of different dating apps. Their Match app as well, Plenty of Fish, OkCupid, so some good names in there, some other brands. But Tinder right now is their biggest brand. They focus on different age groups, different dating styles. Some places are more popular in different areas of the country, so they got a wide variety. They're trying to expand internationally. Their big focus right now is expanding in Asia, where they see a lot of room for growth there as well. So right now, their average subscribers were up 16% in the first quarter to 8.6 million, so some big numbers there. As I said, Tinder's taken up more than half of that. They're at 4.7 million. That was up 1.3 million year over year. About half of their overall subscribers are in the U.S. at this point, which is a good sign as they're trying to grow internationally. That's coming from paid ads. They're also now heavily trying to get people to pay to subscribe for more features, more ability to swipe left or right on Tinder, all of those kind of things. So that's where they see long term is just actual subscription month over month, people who are on there for a decent amount of time. They're coming off 5 straight earnings beats, so some bottom line beats in growth. Our earnings rate, or our estimates right now are calling for 26% earnings growth in 2019. And then a further 17% growth in 2020, so some solid bottom line growth. And then we're calling for 16% top line growth this year and next year. So continuing top line growth. For reference, they're expected to make just over $2 billion this year. So big company in terms of dating apps.
Yep.
It's not something you might think of as making $2 billion a year. And as I said, it is a growing thing, but it is also, they have a lot of runway because at this point, they said roughly 39% of single people in the U.S. have used a dating app. So they have a lot more people to get going forward. Internationally, there's even more people who haven't used dating apps than have that are single. So they really see a lot of growth going forward as more and more people it loses the stigma of, there was a stigma about online dating, and as more and more people do it, it loses that stigma. People are way more accepting of it, I would say, than ever before. So it's definitely a company that has a lot of room to growth in this app-focused world we're living in right now.
Yeah. So do you own either of these two stocks?
I do not, no.
All right. Dave, I got to ask you, do you own Ben's stock?
I don't, but I'll tell you what, I love Ben's stock. It's a really great idea, and they're doing really cool stuff with very focused things. So everyone knows about Tinder. but they have apps for specific ethnic groups and religious affiliations, political affiliations, everything. He's right. It's great.
Yeah, it's lost on me. Tinder to me, at my age, is just like wood for kindling. That's all it means. Thanks to both you guys. Don't forget, always more stock information on our website, Zacks.com. Get over to the homepage and check it all out. With Ben and Dave, I'm Terry Ruffalo.